Good afternoon, everyone. It's my pleasure to welcome you all to the launch of Edelweiss Large and Midcap Index Fund. I'm joined by our MD and CEO Radhika Gupta and Senior Fund Manager Bhavesh Jain on the discussions today around the fund and things around the large and midcap index and the passives space in general. Before I invite Radhika for a quick chat on this topic, let me give you some context on what we are going to discuss today. The moment we see a launch of any index fund, the inevitable debate is between active and passive, whether the alpha is missing or stuff like that. We are going to take all these questions and our take on the same head on. There's also a quick reminder to us that in past we have mentioned that whenever we launch a product in the passive space, it will have to have certain characteristics like it being unique in nature, it being thematic, it being sectoral, or first to market, like we have done in the past. So clearly, this is not a thematic idea. Clearly, it's not a sectoral idea. So what's so unique about it is something that we are going to discover during the course of discussion today. And we are going to take all your questions after the presentation is over. So without taking more time, let me invite our popular and dynamic CEO, Radhika Gupta, and I'll make sure that all the tough questions are asked of her. Welcome, Radhika.
Thank you very much, Deepak. Delighted to be here and hope everyone has had a wonderful new year and good to be back.
So, Radhika, uh, why this fund is my straight and simple question. Why don't you start this with a simple question like this?
So I think you have a habit of asking simple questions, but I think I should give you a simple answer that, at Edelweiss AMC, we've always believed, I don't think we classify products into active or passive or smart beta or whatever goes around these days. I think we think of finding good solutions that solve an investor's need and that work for an advisor. And I think this fund is exactly that. I think for many investors, there is a need to have a equity solution, a simple highlight equity solution that gives you exposure to good quality companies, good quality large companies, good quality mid companies. And that's what we are packaging together in Edelweiss Large and Mid Cap Index Fund. It is a first of its kind launch because it's the first fund launched on this index. 50% of the top 100 companies, 50% of the next 150 companies, packaged into a simple, cost effective index fund. I think that's what the answer is. When many people come to me and say, I need a simple equity fund where I want to start an SIP, I don't know very much, or something that will be part of my core portfolio, but I don't know how many schemes to choose from. I think this fulfills all those answers. So, to reiterate, it's a very basic product. It's a very basic building block of someone's portfolios. The stability of large caps, the alpha of mid caps, and put together in one packaged product where you don't have to worry about choosing from X many categories, X many schemes. It just makes life simple. And I think what is very unique about this product is, there are BSE 200 products, there are Nifty, there are NSE 500 products out there. There's lots of stuff out there in the market. I think the world is divided into two kind of passive funds. One is the Nifty 50, but a lot of people go to that and say, Acha, but what about the mid cap alpha? And then there's all this NSE 500 kind of stuff. But ultimately, all of those people complain don't give you enough exposure to the mid cap index. What is special about this one is the 50-50 combination, 50% large cap, 50% mid cap. It just comes together very simply.
So, Radhika, I will not ask you to go into the construct of the fund too much. I'll leave that to Bhavesh to handle. But a large, product like this, which covers almost 80-90% of India's market cap and perhaps most of the companies and sectors, how do you think it solves a problem of a customer, and how it is a great fit for, especially for a newcomer?
So I think for a newcomer, Deepak, it's quite frankly, it's designed for a newcomer. I think for a newcomer, the conundrum is one, which category of funds to choose from. And then once do I do large cap? Do I do large and mid cap? Do I do mid cap? Do I do flexi cap? Or do I do a combination of large plus some combination of mid? I mean, there is a lot of choice there. Once I've chosen the set of categories, then of all the mutual fund schemes out there, which one do I choose? I think these are two big problems to solve, and the choice is only getting bigger with the number of NFOs and products out there, to be frank. I think in this single product, you just say, listen, okay, this is a good starter equity fund. In fact, to many new members of many of you know, I was in Delhi, to family members, who are new investors, I was telling them, this is a simple, good starter product. You don't need to think about choices, which category to choose, which fund to choose. In this, you will broadly get exposure to a meaningful amount of India's equity market cap, and we'll be done right there.
So talking about choices, Radhika, how does one choose between an active and a passive fund is my point number one, question number one. The second question is with regards to this particular fund. Edelweiss already have a large and mid-cap fund with a very long track record. And you're launching a large and mid-cap index fund. So what is the messaging here and how to select between the two?
Okay, and I think that's a very good question. And as you very correctly said at the beginning, this is not about an active or passive debate. In fact, we think those debates are sort of pointless. I mean, nobody is going to do a very good job predicting either for our own funds or for India as a country as a whole, whether they'll be alpha, whether they will not be alpha. I think the reason to choose passive funds is for their simplicity. The reason we like index funds is, they don't put you into the debate of making a lot of choices. They're convenient, they're simple. And if that's what you're looking for, I think this fits that well. As you very correctly said, we have a long-standing large and mid-cap index fund that we are very proud of. It's a meaningful size fund. And the fund manager's job is to generate alpha. Investors are welcome to choose between both these funds. The reason we launched this fund, despite having an active fund in that category, was for a consumer who doesn't want to think about the choices, because ultimately, when he goes to choose an active large and mid-cap fund, he looks at 40 schemes and, he wonders how much do I do, or do I do large and mid-cap in the first place, or do I do flexi cap? We just created this as a simplicity solution. So I think different kind of products can exist for different kind of consumers. And I don't think it's about alpha. If you want the more customized solution where you want the fund manager to have that ability to generate, outperformance and build that portfolio, the active fund exists. And the passive fund exists for the consumer who's just seeking simplicity.
So basically, if you want the entire universe.
Yes, what he was saying is that if you want the entire universe, then you pick the large and mid-cap index fund. And if you want the selection to happen and to have a basket of 40, 50 stocks from that universe, then you pick the large and mid-cap active fund.
So moving on, Radhika, what about some of the ideas that are still in the making? Would you like to do a curtain raiser on one or two products that are perhaps going to see the light of the day from Edelweiss stable?
Oh, that's a tricky question. I wasn't prepared for that, but yeah, lots of things will see the light of the day from Edelweiss stable, and both on the passive and active side. So on the active equity side, I think with Pradeep joining in as head of equities now, you will see some interesting opportunities on the long only equity side. Our portfolio has been largely more diversified funds, but you should see some more focused oriented products at some point. On the passive side, we are the largest players in the fixed income passive space. Our target maturity funds have been very popular. You will see further series of them, Bharat Bond, non-Bharat Bond, non-target maturity, so that there's a big pipeline there. And even on the equity passives, you've seen this product, but you will also see an interesting theme on the equity side shortly as well. So I think the range is very, very vast. And of course, this is all icing on the cake in addition to our usual basket of funds.
Thanks, Radhika. The last question before I move on to Bhavesh is that we have seen, a plethora of fund launches, especially on the passive side, on the large cap, thematic ideas. Also, some people have launched mid cap and whatnot. I mean, this is such a simple index, large and mid cap index. Why are nobody thought about it launching? The index has been live for so long. What did they miss, or are you missing something?
Well, I hope we're not missing something, but when we looked at the idea, I think when all of us were talking, we knew that so many large cap products existed. We knew that mid cap products existed. But I think when we were talking, and when a DIY or a starter investor starts, he doesn't think, oh, I'm going to do 40% to large cap, then 60% to mid cap. And, again, a lot of choice comes up. And we said, why is there not a broad-based index that gives exposure to this? We looked at the performance and the data and the risk statistics of this, and I'm sure Bhavesh will go into that. And more than all of that, the construct just felt very, very simple, and it came together, which is why we chose to launch the index. We are glad we are first to market in this, and honestly, consumers have reacted with a lot of excitement around this idea. So yes, at a time when a lot of thematic indices, smart indices, X indices, Y indices are launching, this appears like a very simple product, but our intention is also to solve for the big problems, and the big problem is your core portfolio.
So 2019 was India's first debt ETF, bond debt ETF. 2020 was India's first healthcare MSCI index fund. 2021 March, first debt index fund, and now first large and mid cap index fund. Why are you so fascinated by launching the first ones, Radhika?
I think the answer to that is that we should bring something different to consumers. I mean, there's not to say that we won't launch vanilla things, but at least in our own internal product committees, I think the questions we ask ourselves are, is this something new that we can bring to market? Because if others are providing it, perhaps why should we? Is it something that will deliver some value to the consumer? Is it something that we are good at? And is it something that can attract decent scale and size? I think this checks all the boxes. But our hope is to be in our product thinking in basket, and we've got this feedback from many advisor and distribution partners, reasonably ahead of the curve in how we think, and yet reasonably close to solving your problems.
Thank you so much, Radhika, for starting this interesting debate. So Radhika, let me ask you a few more questions on the product itself. Now, you briefly mentioned about the construct of the product. Now, is the construct of 50-50 that has been selected, is it the design of the product itself, or the index is such? And if you could re-explain how it will work in real life, and by giving an example so that one can really relate to it.
Sure. So I think people know of the 250 top companies in India. I think the way this product is broken is, you take 50%. If you've given me 100 rupees, let's make this very practical. 50 rupees I take and I allocate to the top 100 companies in India, which is approximately what we call your large cap universe. 50 rupees I take and I allocate to the 150 next companies in India, which is broadly what I call my mid-cap universe. So 50 rupees has gone into the top 100 names weighted by market cap, and 50 rupees has gone into the next 150 names weighted by market cap. This is actually the design of the index. So this is not a construct that we came up. This is an old index created by NSE. And a very, very strong index. And actually what you see on the screen is some of the metrics of the index here. But this is the construct of the index. So 50-50, and it's one of the few indices, Deepak. Normally indices, if you had taken a top 250 index, are fully market cap weighted, which means your large cap portion accounts for a significantly large amount of the weight. Typically 60-70% of the weight comes from your large cap, and your participation in mid caps is only 20-30%. In this case, it actually looks different because large cap is capped at 50%, and then mid cap is the balance 50%.
Also, Radhika, does it also solve a problem of knowing which index to select in terms of winners? As we saw multiple times that sometimes a large cap is doing well, sometimes a mid cap, sometimes small cap, and sometimes a combination. So how does it really solve that problem?
It actually solves two problems. So as you very correctly said, like there was this period in 2018 and 19, and there was a very long run where large caps significantly outperformed mid caps. Now, if you were doing that selection exercise yourself, then how much of large and mid cap to allocate to would be difficult. In fact, even if you did the personal allocations yourself, what would happen in a period where mid caps did well is that 50% of mid cap, say you did Deepak Jain started a portfolio and he did 50 large cap and 50 mid cap. But mid caps rallied a lot, suddenly that weight would go up a lot and then you would have to kind of rebalance it down. Here it's automatically always 50-50. In fact, when you compare it to a lot of normal active funds, one of the nice things about this is that there is complete consistency in market cap allocation. So you are always 50-50 versus in the active universe, because of the flexibility the fund manager has, you can be 40 large cap, 60 mid cap, little bit small cap, etc., etc. So that really works, for the fund.
Okay, Radhika, with regards to the index itself, once we have committed money to a particular index, and we're talking about the fact that this being, let's say, a probably one index which solves most of the equity requirement, how does it compare with some of the other indices that we have in the market today?
Sure. So I think why don't we pull up some index data? If you could just skip on to a slide or two down. Perfect. And I think this will help. So one of the nice things about the Nifty Large and Mid Cap Index, and here, Deepak, if you could just go back one slide. Yeah, there. So I think, yeah, perfect. If you could just stop there. So here we've actually compared it to two popular indices, and we'll also talk about Nifty 50 because I know that that's an index that people also look at, but we'll just run through a couple of indices. One is the Nifty 100 and the Nifty Mid Cap Index. So I think the point I was trying to make is one of the benefits of an index like this is it significantly reduces sector concentration risk. If you look at an index like Nifty 50, and you see that on the bottom here, 37% is financial services. Even Nifty has a 34% weight to financial services. In an index like this, because of the component of mid-cap, for instance, your financials weight comes down to 25. And if you look at some of the other sectors, because of the large proportion of mid-caps, they are well represented. So if you look at the bit on the right, you can see things like healthcare services, chemicals, industrial manufacturing, they also get well represented. So unlike a Nifty or a Nifty 100, which has major exposure to financial services and IT and less exposure to some of the new age sectors, this solves that problem well. Deepak, back to you.
So, we'll take some viewers' questions before we, take more slides and more data. Since the concept is 50-50, what additional benefit this index fund will bring as compared to a do-it-yourself investor who does, say, two SIP of same value in one in 100 index and one in 150 index?
I think the biggest benefit is one, that he doesn't have to do the job of rebalancing. When you're doing a SIP in two different funds outside of tracking two different funds, as I said, if mid caps rally significantly relative to large caps, then your mid cap portion will expand from 50% of your portfolio to 60-70. You'll have to rebalance it and you'll have a material tax impact. This all goes away. So that headache of rebalancing actually goes away completely. What we can also show you is, if you look at how then just stop here on slide 17, I think this gives you a really good perspective on how to look at the product returns. This is the Nifty large and mid cap index and how the rolling returns of this look over a 10-year period and a 5-year period compared to some popular indices. We've got Nifty here. We've also got Next 50. Which is a popular index. And then we've got many other indices, including the mid-cap. I think a couple of things to highlight. On a 10-year basis, I think the average return is meaningfully better than larger cap indices like the Nifty. In fact, closer to the mid-cap index. But if you look at the risk statistics, the standard deviation is actually lower than the mid-cap index. Deepak, if you could just go back to the previous slide. And so on a risk return basis, you're actually quite well off It's a nice trade-off between where the large and mid-cap indices are. And that is, I think, one of the reasons. So this index represents the sweet spot between large and mid-cap.
So how is this fund done, or on a backtesting basis, against, let's say, a universe of large and mid-cap funds, or the flexi cap funds, which are very popular?
Sure. So I think you pulled up some data right there, which the viewers can see on their screen. And one of the things that we always say about fund performance is, including any fund, is that it's very hard to predict what the winner is in the active fund universe. The number one fund any particular year changes. What you will see is, and you have the large and mid cap index at the top. This is reasonably consistent. So if you look at it over a 10-year, 5-year, and this year period, it's reasonably in the top couple of things compared to active funds. And I think it solves, in that sense, the problem of predictability that we've been talking about.
So Radhika, do you think that this fund can really be replacement for the basket of flexi cap and large cap funds?
So I think this, and replacement is a big word, but I think it is a very good core portfolio solution. I think it is more suitable than a large cap fund if you had to look at a single core portfolio solution, simply because large cap just doesn't let you capture. Large cap one is very concentrated in a few sectors. It doesn't let you capture the alpha and the new gen economy that comes from mid cap. In flexi cap, you're leaving really a lot to fund manager discretion. So if you look at a flexi cap fund, a flexi cap category has a lot of flexibility, as per the name, to really vary between large, mid, and small cap. Here, you're very clean in terms of the 50-50 split. Flexi cap funds can be very wide in their range.
So I think you have covered the construct of the fund, how it can be positioned in a portfolio. It performs well amongst its peer indices. And it is also done relatively well when we talk about the flexi cap funds and the large and mid cap funds. We have Bhavesh back on the show. I would like to ask Bhavesh a few questions about the statistics with regards to the matrix of underlines of this particular index, and what's his take on those.
So if you will see, like for example, the large cap index, it is skewed towards financials and IT. So these two sectors put together is more than 50% weightage as far as large cap is concerned. Similarly, you will see there is no weightage to upcoming sectors, or you can say promising sectors like chemicals, constructions. You will have very minimal representation in those indices. When you come to a blended index, where it is a 50% weightage to large cap and 50% weightage to mid cap, your financials automatically get trimmed out to say close to 25%. And you start getting representations to sectors like construction, chemicals, pharma, metals to a reasonable number. So this helps you to, you can say, in a way, diversify your portfolio, because there are 250 stocks. You are giving equal weightage to large cap and mid cap. And that's why there is no, you can say, concentration risk on a particular sector, like we see in case of financials in both, say, Nifty 100 index and Nifty mid cap index. So all these things are taken care of when you select a combination of both large cap and mid cap with equal weightage to both of them.
So why don't you just take us and give us your summary opinion on this fund? How does this really work in a client's portfolio in maybe a 3 or 4 point overall summarization of the entire proposition?
Yes, so I think this fund, the basic thing what we want to achieve is to take away that problem of lot of confusion of selecting whether we want to go into large cap fund, mid cap fund. And within large cap, there are say 10, 20 different styles of funds which individual fund manager will manage. The winners keeps on changing. So there is a lot of, you can say, challenges which normally an investor will face. So especially for those who are coming into market for the first time, we want to provide a plain, simple solution wherein you can get exposure to both, you can say, a stable large cap universe, also a growth oriented universe, giving, you can say, 101 to 250 mid cap companies. So this is also, this will help you to reduce your efforts of tracking your funds, whether the fund is doing good, whether you are getting alpha, you are not getting alpha, whether the fund is solving your problem or not solving your problem, rebalancing is happening or not happening. All these things is also taken care of, because every quarter we will rebalance your portfolio 50% into large cap and 50% into mid cap. Plus, because it is an index fund, winners keep on getting more and more weightage. Losers get out of index over a, you can say, on a half yearly basis, as and when index will get rebalanced on a, you can say, on a say in March and September every year. So again, this is not an, you can say, competition to your traditional equity portfolio. It can be used as a complementary strategy wherein you are getting some stability, some diversification compared to your traditional, you can say, equity products. Again, for those investors who want to do it yourself, they are not having an access, you can say, access to an advisor, or they don't want to come through an advisor and directly want to invest. So this can be a good starting point for them. And obviously, because it is an index fund, cost is obviously lower. So this can help you to, you can say, in a way, invest in top 250 companies in a reasonable, you can say, exposure to both large cap and mid cap with a much lower expense ratio. So this will be the summary for this point in a simple way, you can say.
I have a few questions from our audience today. On the slide that Radhika shared with regards to performance compared to large and mid cap and flexi cap, what is your opinion, Bhavesh, that most of the fancy funds in this category have not been able to beat this index?
See, again, if you see, always winners keep on changing, and that is not only true for funds, that is also true for, you can say, sectors and individual stocks also. Because it is an index fund, winners keeps on getting, you can say, higher weightage, and losers gets on, you can say, trimmed out of index over a regular period. And say, for example, a stock which is doing much better, even in case of, say, large cap index, HDFC, Reliance, they are almost at 10% weightage now. So individual fund manager will not be in a position to take that kind of weightage in those stocks. So they will always be underweight on those winners. And as a result, over a long period of time, that is the reason why it becomes difficult to generate alpha. We have already seen large cap universe facing this problem in last almost, you can say, now 4 to 5 years. And then that problem, as and when market will get developed, it will get more and more mature. That problem will keep on moving towards mid cap and over a period of time, even to the small cap universe. So this is something which this fund has been able to achieve because there is no selection bias, there is no fund manager bias. Automatically, winners keeps on getting higher weightage and losers keeps on getting out of index. This fund will be always better than median over a long period of time.
So thanks, Bhavesh. So Radhika already mentioned that this fund does well against many other indices on the large and mid cap and broader indices as well. But if we were to stick our conversation or narrative to, let's say, funds which have a large exposure to mid and small cap, like the Nifty 200 and Nifty 500, how does this fund index really stack up?
Yes, so you will see if you have to rank these three indices having reasonable exposure to mid cap and small cap. So your Nifty 200, Nifty 500, and Nifty large cap and mid cap. 90% of the time, Nifty large and mid cap fund has been ranked 1. This, if you will see to other two indices, they are not even closer to that. So almost 91% of the time, this fund is ranked 1. Nifty 500 is almost 0, and Nifty 200 has been ranked 1 only 9% of the time. Whereas this is something which you can see the numbers itself speak for themselves, that you don't have to think much about. And that is the case the fund has been able to achieve over last, you can say, almost a decade now. So the fund, the index has shown that track record in last 10, 11 years. So in fact, the data is for last 15 years now in front of you. So this is something which the fund will be able to achieve. And then the number itself is there. So you can just have a look on the slide.
So Radhika, typical question that often comes from investors is, which fund should I select from my SIP? All I'm looking is to get market returns. I'm moving from traditional investments to market link investments. How do I select fund? Which fund to select? Is there a solution which is also embedded in this fund?
So I think here what we've done, and one of the reasons, I mean, I get this question a lot from people that I'm a first-time equity investor. I want a fund for SIP, which one do I pick? And then, I typically give them a range of active funds and they're like, just tell me one fund. And I think this data shows you why this can give you a meaningful answer. So here we've given you the SIP performance over various tenures, 3, 5, 10, 15. And we've also, Bhavesh, if you could just stay on slide 19, we've shown you how the large and mid-cap index XIRR looks for an SIP. And, while I would ignore the shorter term time horizons, over 10, 15 years, I think this becomes very meaningful in terms of its SIP performance. I mean, the 15-year SIP return is some 16% odd. It is, as Bhavesh said, better than a fund like Nifty 200 because in the long term, the mid-cap component also works well. So rather than, to your point, doing a large cap SIP and a mid-cap SIP, you can combine it into a simple SIP here. It's an easy to set up SIP in that sense.
Finally, Bhavesh, your comments on index statistics with regards to standard deviation, correlation against Nifty 50. If you would like to throw some light there, maybe on slide number 8.
Yes, Deepak. So as you already said, even after being, you can say, having a larger exposure to mid-cap, almost 50%, even after that, volatility or standard deviation for this index is slightly better than what you will see in your Nifty 50 index also. The portfolio beta is almost 0.87. So you're taking less risk compared to what Nifty will be taking. And even after that, you are getting better return. Obviously, because we have more exposure towards, you can say, some of the sectors where they're new coming sectors, like in mid-cap. The portfolio, P will be slightly higher compared to Nifty 50 index. But even after that, over a long period of time, you are taking a lower volatility, you are taking lower beta risk, and even after that, you are getting better risk-adjusted return compared to your large cap universe, or you can say large cap index.
So just to summarize some of the questions that are coming, please don't confuse this with large and mid-cap fund that we already have. The number of scripts would be exactly as it is in the index, which is 250. So some of the question that has come, I just wanted to clarify myself without really asking either Radhika or Bhavesh. Bhavesh, if you could just summarize the fund structure in terms of load, etc., if you could take us to that slide, and we can perhaps put an end to today's conversation around this fund. So as you can see, it's an open-ended index fund. It will have both regular and direct plan. The fund manager will be Bhavesh Jain. The expenses in the regular plan would be 1% plus whatever statutory levies. And in the direct plan, it will be around 30 basis point, as you can see. You can invest a minimum of 5,000 rupees and multiples of rupee 1 thereafter. There is no exit load. And that's really important for perhaps for many of the people who want to take call in the market without being subject to any premature penalties. So with that, we have come to a conclusion. We would like to thank all the participants today for asking questions, for taking time out. Radhika, before we end, final comments from you.
No, thank you to everybody for joining us, and thank you for the enthusiasm around this product as we are, continuing to build out our product line and our line of passive products, including on the equity side. So this is one in a series of other launches. Recall we had healthcare last year, and then we had 2 conversions, Quality 30 and Nifty. So between large and mid-cap, Nifty, Quality, and now healthcare, I think we have a meaningful line of interesting equity passive funds, and more of them should come your way. So we welcome your feedback and we look forward to your support.
But I hope we have been able to cover the entire product and answer your questions. Looking forward to your support in this and all other Edelweiss products.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.